I'm not a financial advisor. This is not financial advice. Please do your own research. Welcome to the Vinny G Markets channel, brought to you by Vinny G Money. I know we've been gone for a little bit, but we back. These markets are going a little crazy right now. As I'm sure most of us know, these tariffs are hitting the market hard. We got the S&P 500 down about a little over 8% within the past 5 days. Within those past 5 days, it brought us back to 2024 levels, as over $5 trillion was wiped out of the S&P 500 within its last 2 sessions, which is absolutely insane. But we're going to take a look at everything to see what's justifying this and what to look for going forward. We're going to start with the basics, our 3 indicators, and we're going to start with our first one, the US 10-year Treasury, currently sitting at 4%. I really think this is being overlooked right now because from late April 2nd, this has been doing nothing but plummeting. We dropped below 4% to 3.7 before we rebounded a little bit to 4%, which is super low right now for the S&P considering we're in a higher interest rate environment. Looking at our second indicator, the US dollar index, currently sitting at 102.89, and this too has been doing nothing but tanking this week. We were sitting at 101 at one point, but since April 3rd, it's been doing nothing but steadily going up, and we're definitely going to get into this a little more later in the video. But our third indicator, crude oil, sitting at 62.32, has been doing nothing but tanking. This is purely in relation to the tariffs. Less production is being anticipated going around, plus OPEC has actually increased their production as of late. Again, we'll go over this more into the video, but before we do that, I'm gonna have to give a second disclaimer. I got no idea the direction of anything in this market on where it's going. All we're gonna do is list out the bull cases on why we might see a market bounce after this hard drop, but we're also gonna list out all the bear cases and give out the scenarios on why this market might continue to plummet, and at the end of everything, give out the good old Vinny G market analysis on where I think we're heading. But again, and I must reiterate, it's all speculation. So the first bull case we got going on is the dropping of that US 10-year Treasury rate. It's sitting at 4%, is super low for the S&P 500, especially off that big drop we've had this past week. That could easily create breathing room with that interest rate being suppressed. The bad case that comes along with this though is the rising of that US dollar index. What's interesting though is usually these two things move in unison. When the Treasury rates fall, usually so does the US dollar index. Typically when we see the US dollar index increase with the Treasury rates decreasing, that usually indicates a fear trade going on, which could be the case with the amount the S&P 500 dropped within 5 days. So these are just two things we're going to have to monitor. But the US 10-year Treasury, it's dropping for 2 reasons. One, the next Federal Reserve meeting, it's hardly anticipated that they're going to drop interest rates, so that might be reflecting that drop in the US 10-year Treasury. We're going to go over that a little bit more. And also, you know, we monitor the reverse repos, and those reverse repos have been increasing. So if those reverse repos do continue to increase, we could see downward pressure on those Treasury rates as well. And when it comes to the US dollar index increase, we stated this in past videos, believe it or not, when there's global chaos going on, one of the safest places to be is still that US dollar. So that's what we could be seeing as more global conflict goes on. People could be having that fear trade, putting money in the US dollar, and that could hurt the stock market. But we're going to see if it starts moving in unison with this Treasury rate. If the Treasury rate continues to decrease, I gotta believe that that US dollar index is going to decrease along with it, creating breather room for the stock market. But it's two things that we're just going to monitor right now. But staying on the bear cases, this is probably one of the biggest bear cases we got going on right now, which is significantly overlooked. It's the rolling off of the Federal Reserve balance sheet. That's the liquidity to the market. We've pulled this up in past videos. The balance sheet has been doing nothing but decreasing. We're at 2020 levels right now. If the Federal Reserve continues to run off the balance sheet like this, that's just less money out there, and that's less money that could reach the stock market, where we could see further downside. But the bull case that comes along with this is the last Federal Reserve meeting, Uncle Jerome said they're going to slow down the running off of this balance sheet. They were doing $25 billion a month. They claim they're going to do only $5 billion a month going forward. So just based off that news could create a bounce for the stock market. So we're just going to have to continue looking at that Federal Reserve balance sheet, because over the history of the stock market has moved hand in hand with that Federal Reserve balance sheet. When the Federal Reserve increases their balance sheet, the stock market goes up. When they stop increasing it, that's typically when you see pullbacks in the stock market. But again, interestingly, with the drop off of the Federal Reserve Reserve balance sheet, the stock market has still been making higher highs. So this is one of the rare inversions we've been seeing with the stock market and the Federal Reserve balance sheet. So we're currently at a big inversion right now, which would be a bad case with the inversion going on, because if the stock market wants to keep up with that Federal Reserve balance sheet, which it typically does over time, it would mean there's further drop to come. So the next bull case we got going on is the next Federal Reserve meeting. It's highly anticipated that they're going to drop interest rates, and that high anticipation could be the reason why those US 10-year Treasury rates decrease as well, which create two bull cases. But the bad case that comes along with this are those tariffs. We're not going to spend any time on these tariffs. Everybody knows what's going on with them by now. And Uncle Jerome of the Federal Reserve, he's already stated that these tariffs are going to increase inflation. He already knows this. And what will piggyback off of this is another bad case that the Federal Reserve wants to stay higher for longer to fight inflation. It's really because they want to destroy the economy, but they use the excuse that they want to fight inflation, even though inflation is going to incur anyway over these tariffs. But the tariffs combined with the Federal Reserve wanting to keep higher rates for longer could definitely create a bad case for these markets where we could see a further drop. But the Federal Reserve, their next meeting is not until May 7th. So if the anticipation just remains high that they're going to drop interest rates up until May 7th, that could give plenty of time for the stock market to breathe, even if the Federal Reserve doesn't drop interest rates on their next meeting. And another bull case we got going on are the unemployment numbers that came out last week. Unemployment's at 4.2%. It's been increasing since 2023, so that unemployment rate is ticking up, and US wage growth continues to nosedive. We're almost at a low since 2022. We sit at 3.8% wage growth, which is super low right now, especially with inflation going up. We'll talk about this more, but with unemployment kicking up and wages not increasing enough, so sadly this would help out with inflation because people are just not going to be able to afford to buy things, create less demand because more people are unemployed and just making less money in general. And you could go back to our Federal Reserve warning shots videos. The Federal Reserve been talking about this for years. They want to see unemployment go up, and that's going to be a reason for them to drop interest rates. We're not going to keep talking about the same things over and over, but the Federal Reserve wants to see unemployment go up, and that would give an excuse for them to drop interest rates, which would help out the stock market. So now to give the Vinny G analysis on this, I do think we have further downside to go before we see a bounce, but that further downside, it's going to be in reference to that Federal Reserve balance sheet. With it just decreasing, it's going to catch up with the stock market, plus that US dollar index, if it stays increased, that's going to put pressure on the stock market as well. And there's just too much uncertainty with these tariffs, which I think continues to hit the stock market. But I think we do see a bounce after we move down a little bit more, because history always repeats itself. And going to Donald Trump when he was first elected, this is 2018, is when he first started a trade war with China. There was a 20% drop in the stock market in 2018, but it was followed by a one-year bull run. Also in 2020, we all know with C19, everything with that, what happened, a 35% drop in the stock market, and that was followed by a two-year bull run as well. So 2025, we're kind of looking at the same thing. This tariff war could drop the stock market, let's call it between that 20 to 35%. I think we're at about a 17% drop right now from its current highs. So if we do drop further into that 20-25%, if history repeats itself, that's going to be followed by a bull run, which has happened every time with Donald Trump when he was in office. Again, we're not getting political. I have no problem with any of these politicians. They're all the same. They're all bought by the Federal Reserve. The Federal Reserve runs everything. So we're not talking about politicians here and there, but those are two instances where Donald Trump started a trade war. Also, what happened with C-word 19, where there were significant drops in the stock market, but was also followed by a bull run right after it. So if we actually start rolling back on some of these tariffs after a big drop in the stock market, along with the Federal Reserve dropping their interest rates, and if that US 10-year Treasury also drops, with the balance sheet roll-off getting slowed down, that could create a bull run after a possible 20 to 30% drop in the stock market. So I do think we do see a bounce from there after we move down a little bit more, but this is where you kind of want a dollar cost average in, because even with all that, there's still too much uncertainty going on with these tariffs, along with the Federal Reserve wanting to stay higher for longer. That could limit any type of bull run we have going on. And we're just going to give a little truth 101 when it comes to these tariffs. We've been saying the next global war, it's not going to be a physical war, but it's going to be a currency and commodities war, and that's what you're starting to see play out. But it's not a war in between countries. These countries, they all have central banks. The United States has the Federal Reserve, China has the Bank of China, Canada has their own central central bank, Ukraine owns central bank, Russia their own central bank. All these countries that are supposedly at war with each other have their own central banks that control their money supply and interest rates. So this is a war not on the countries, it's a war of the middle class, because these costs that are coming down for these tariffs, it's hitting the consumer directly, and the middle class is already struggling. We're already in record debt. We already went over the unemployment numbers. Wages aren't keeping up. So the worst time to put tariffs in is right now, when people are losing their jobs and wages aren't keeping up with the inflation that's already going on. And speaking of debt, the whole Doge program had nothing to do with cutting governmental spending. Does the government waste tons of money? Absolutely. But we're already $39 trillion in debt. There's no amount of cutting we could do where we're going to come close to paying off $39 trillion. So that whole Doge program that was coming out is all about increasing unemployment. They have no intentions of paying $39 trillion in debt. There's not enough saving we could do for that. And Doge wanted to send out dividend checks for the money that they do save. That's just the first form of UBI, Universal Basic Income. I'm not saying that's going to pass, but that's the plan. Get people unemployed and just send them a check for what you think is good, while people sit home because they're unemployed. And honestly, they'll probably just be happy about that. And it's only a matter of time before the private companies follow suit with what Doge is trying to do as well. But getting back to the tariffs, if we start producing everything in America, we'll have to pay a tariff tax. Inflation is going to skyrocket, and it's only going to get people low-paying factory job opportunities that nobody wants. The solution to all this, which is also going to bring inflation down and people not going to want to work these jobs, is robots and automation is going to be brought in to make everything. And that's going to bring the cost down, because with robots and automation, you're not going to have to pay any salary, so these companies are going to save money, and that's going to enable them to bring prices down. Everybody's happy, things are cheaper, people at home not working, getting paid, and it just solves everything. And this was already all tested out in 2020. We just got to flip the switch again. Y'all don't hear me though. And this was pushed by Trump in his first term, when in 2020-21 he passed the National Artificial Intelligence Initiative, and now in his second term he invested $500 billion in AI infrastructure for the United States. $500 billion is a lot of money, and that's why he has ties with Elon Musk, who has the automation technology, and he's big on crypto because he's ushering in the new digital economy as we enter the fourth industrial revolution. We go over this in plenty of other videos, and it ties in perfectly with the Federal Reserve, because the Fed now has the excuse, with tariffs increasing inflation, to keep rates higher for longer. And when we keep rates higher for longer, they're going to continue running off that balance sheet, and that could probably crash everything, including the stock market, the entire economy. And the solution is going to be the new digital economy with central bank digital currencies, programmable money. Nothing's going to be private, everything on blockchain, tokenized, with the workforce that's entirely automated, ran on AI and robots. So run this video back if you need to, but you should see everything in place when it comes to tariffs, how it's going to affect inflation, unemployment right now, the Doge and government programs trying to get people unemployed, and how we have all this AI infrastructure now, how this is all just ushering in that fourth industrial revolution, where people are going to enter the metaverse and everything's going to be digital. And speaking of the new digital economy, Bitcoin has actually held up very well this week. BlackRock, they bought $25 million worth of Bitcoin. Not that that's much, but the article just itself could keep the price boosted. Also, the lower interest rates always gives crypto a boost to the market. And if you think you know where these markets are going, someone's going to have to explain this. When it comes to the S&P 500, we're down 8% for the week, yet Fartcoin, which is a meme coin called Farcoin, is up over 100% this week. So Farcoin has by far outperformed the S&P 500 this week, with all the global economic turmoil that's going on. I wish I was joking, but I'm not. And part of the Vinny G market solution to all this is flipping those 0DTE SPX credit spreads. So we're going to get those videos popping again on IG, where we go over the markets on a daily basis. We'll see if we put any trades in, and we'll go over them on a daily basis, because inflation already here, cost of goods only going up, unemployment ticking up, wages aren't keeping up. We got to stay fresh out here. So how else are we going to do that other than flipping these 0DTE SPX credit spreads? So tune into the IG for that. We're going to have more videos on YouTube. The IG is going to be popping off again. So if you want to come get this money, get this paper, stay ahead of the markets, come mess with your boy Vinny G Money. If you like what you hear, Hulk smash that like button. And as always, I'll leave you off with this. The God of the Bible, the God of Abraham, the Father of our Lord and Savior Jesus Christ is real, and may he bless you.